Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita. With me is Shah, and let's have a look at how the Nifty is doing. It's not a bad day of trade at all, frankly, to start with. We've had a fairly decent day of trade, around 0.4% higher on the Nifty. We've seen a bit of a cool off from the highs of the day. 25,600 is where we're currently seeing some bit of support, at least at this point. Let's talk also about what are the sectors which are really standing out. PSU banks have slipped into the red. The Nifty small cap continues to underperform. But in terms of sectors, the Nifty auto is doing well for itself. The Nifty bank is holding up fairly well. But it's the Nifty IT. That's the one which is a rock star in trade today. 1.7% higher on the Nifty IT index. And within that, it's Infosys, up 2.5+% in trade today. Emphasis also doing well for itself, nearly 2% higher. HCL Tech holding on to a gain of around 1.5% odd. So is Wipro, so is Persistent, and 1% each for TCS, Coforge, and Tech Mahindra. It's not looking like a bad day at all where IT is concerned. So that's the sector which is really standing out. Pharma is the other one, 9% higher on the Nifty Pharma index. Some names which have come out with numbers. JB Chemicals is up 6%. Torrent Pharma is up 7%. You also have the likes of a Divi's, which is doing fairly well for itself, or at least was for a better part of the day. And now we've seen a bit of a cool off where a Divi's Labs is concerned. So that's the take with regard to how Pharma is playing out. A couple of losers as well in that pack, so it's not all winners, but an Ipca, a Lupin, an Abbott doing fairly well for themselves. So is an Aurobindo Pharma, mind you. That one also came out with numbers last week. So all of those in focus. The Nifty Midcap Index within broader markets doing fairly well for itself as well. 0.5% higher, clinging on to those gains very, very smartly. So that one also doing fairly decently. Within the auto pack, again, we had a few numbers. A Hero Moto, though, a Bosch doing well for itself. None of those on the back of numbers, but some of those names are the ones which are doing well and lending some support to the benchmark index. On the Nifty itself, let me talk about a few names which are standing out. Infosys, I did speak about. HCL Tech are the two top gainers. No surprise there. But a Grasim is doing fairly well for itself. Wipro also and Coal India also have held on to some gains. You're seeing Trent as the biggest casualty of the day on the Nifty 50, 7.5% down. By a mile, the biggest casualty. So that one is where some part of the pain lies. So is a Tata Consumer, which is down 1.5% odd. So is an Eternal. So some consumption-facing names seeing some heat. Apollo Hospitals is the other one, which is down. Max Health. So it's hospitals and consumption. Really, those two are the ones which are taking some heat. Sneh, anything that you're seeing?
I'm actually looking at VMart. Harsh, Q2 numbers are out and they are largely in line. And on the flip side, they in fact look slightly better than what the street was estimating. The revenue is spot on in line. The loss is lesser than what the street was estimating. So that is looking good. EBITDA has done well. Margins have also beat street estimates. So it's actually going to be very important to look at the earnings fine print. I want to take a look at the store expansion number once their presentation is out. Their earnings have just come out because it's almost a 6.5% drop coming in on that stock, which is surprising because numbers are either in line or they are slightly better than street estimates. So that is something to watch out for. But yes, talking about Trent, the big loser on the street on the back of weaker than expected numbers coming in terms of the revenue growth. Other numbers were in line, but you also have that City downgrade coming in that's playing on the stock quite heavily. A 7.5% cut coming in on Trent, and we'll get to that in a bit. But we have Kunal in the studio with us. Kunal, 25,622, almost the day's high, 0.5% uptick coming in. It looks good for the first day of the week, but can we see this sustain for the entire week?
Yeah, it should. And I think what we've done today is we've managed to break the downtrend on the index. So over the last, I think, 7 days, when the trend was on the negative side for the indices, we were making a pattern of lower highs and lower lows. We finally managed to arrest that trend or break that trend for the index, and that I believe could be a positive sign. And there have been a lot many silent large cap performers, Bharti Airtel, Reliance Industries, etc., which have done a fair share for themselves on an intraday basis today. You've seen good recovery in the private sector banking names, or at least a decent recovery, I would say. Where these stocks are not showing signs of a further accelerated sell-off or a price correction. So when you see such kind of a mix on the intraday basis, that generally goes to say that the markets are finding a good support at the lower levels. Now, if we sustain about this 24, say 500, 600 zone, say for the next couple of days, what we may also see is a change of behavior from the option traders, where till say Thursday, Friday previous week, when the markets were just about fluctuating at 24,500 mark, maybe that could have been a pivot point for traders to initiate fresh shorting positions on the 24,500 calls. But then I think if the index sustains 24,500 mark on the upside, then we may see this change of behavior, where from being a call writers, traders would start taking stance on being on the more put writing side. So that should solidify the base further for the Nifty over the near term. So net seems to be a good start for the week, and hopefully we should see further legs on the upside.
Okay. Picks, Kunal?
So two buy calls. Hudco is something which looks attractive. The stock has gone through a decent 8% correction in the last, I think, 4-5 days. So I think at 230-35 thereabouts looks to be at an attractive buy territory. So we'll look out for 240ish as a near-term target. Stop loss could be kept at 230 mark. Hindustan Zinc is the other stock. Now we know that the stock is seemingly linked with the rise in the silver prices. But then I think on the short-term charts, we're seeing good bounce on Hindustan Zinc and a base formation at the 470 odd level. So we'll look out for targets in the range of 500ish. Stop loss could be kept at close to 445 mark.
Okay, so Hudco and Hinzing looking good to Kunal on the charts right now. On that note, we'll slip into a very short break. On the other side, when we return, we'll be in conversation with Mr. Harold van der Linde. Lots to talk about, so you stay tuned and we'll be right back.
And, that time of the show where we bring in a market expert, and who better to talk about markets than Harold van der Linde. Needs no introduction, and has a great lens into how not just Indian markets, but markets across the world, especially in the Asia-Pacific region, are likely playing out. Harold, great chatting. Hi, this is Harsh here. Harold, let me start off by understanding from you your take. Can growth surprise on the upside? You've given a target of 94,000 on the Nifty by end of 2026, largely driven by growth. I'm trying to understand, can India growth, in your opinion, surprise on the upside? Is that what you're really penciling in?
Not completely, but I think India growth could surprise a little bit on the upside. What we've seen is that the expectations of growth have really come down in India. At the beginning of this year, people were talking about maybe 18% growth in India this year. At the moment, we're hovering somewhere around 8 or 9%. And it looks at the moment that the numbers that are coming in the reporting season are doing a little bit better than expected. So it could be that there's a bit of an upside surprise. And I think next year earnings are going to be a little bit better than what it was this year. So it could happen, yes.
94,000 on the Sensex, of course, not on the Nifty. That's my error. Talk to us, Harold, about the earnings recovery at play, and what will be the key driver of that? Margins have started to come under pressure this year, in this financial year. They were under a bit of pressure last year as well, but we're seeing visible pressure this year. Do you believe that it is going to be margin-led, the earnings uptick or the earnings surprise, if that were to come through? Or is it going to be top-line-led? Or is it going to be both? Are both engines going to fire, in your opinion?
I think it's going to be both. The top line, I think, is because we're going to have GST is changed, right? So that supports some of the consumer companies. Some of the consumer companies, in particular the staples, will also benefit from lower input cost, raw materials, and these sort of things are coming off a bit. In the banks, I think you're going to see a bit of margin improvement, so the story is slightly different there, and also asset quality could improve. And yeah, depending a bit on the currency, but also we think actually the IT sector could see some demand returning and things a little bit better as there. So they're going to be for different sectors, sort of different drivers. But the story is that the expectations are really low at the moment, and that the earnings could do a little bit better than what they've done in 2025 as we go into 2026. But that, I think, is not the only story for India. It's also a story whereby regional funds are going to shift. But if we look at earnings, yes, I think the earnings picture for 2026 look a little bit better, but it's, depending on the sector, a bit of a top line or a margin story.
Harold, hi, afternoon. After a period of relative underperformance versus its Asian peers, how are you seeing the Indian equities and Indian portfolios stack up when it comes to the preference of foreign investors? Because yes, we've seen very muted investments from FIIs, but that seems to be changing a little bit because now we seem to have started to gain a little bit more of FII exposure. Do you think that trend is sustainable right now?
Yes, I think this trend is only just starting, actually. And this is why we upgraded India about, what is it, a month ago now. What typically what has happened is that people in India look at China and say, can India perform if China performs? Because the feeling was that if people buy China, they're going to sell India or vice versa. I think that dynamic has completely changed. China is going up because locals are buying it. The foreigners are buying Korea, Taiwan, Japan because of AI. And the story here, to a large extent, is that I think you're going to see a shift from AI into markets that don't have AI, and that is, amongst others, India. If you look at, for example, the holdings that portfolios have in Taiwan and Korea, that is really a stretch. The average Asian portfolio has got 10% in TSMC, the largest stock in Taiwan. They can't really buy that much more. Hynix, the second largest stock in Korea, is now the second largest overweight position in gem portfolios as well. So they can't really buy that much more. And I think also AI has been a real good story into 2025. I think that might change a bit into 2026. And therefore, the shift would be, where else can you grow? What other growth stories could there be? And I think India is simply a good example of that.
Harold, you did speak about AI. Now that we're at the starting journey of AI and India seems to be picking up steam, and that is what is making investors attract towards India. But tell me, Harold, do you feel India is lagging too much far behind when it comes to the AI race, or do you believe that we're at par at least with our Asian peers, if not the American side?
No, I think at the moment the AI story is really a story between the US and China. Even Europe is not where it wants it to be. And that story is, if we look at the companies that drive it, it is a few American companies, some Chinese companies, and of course, you get the Taiwanese and the Koreans that are sitting there in the middle as well. So that's really where the story is developed, and these stocks have done phenomenally well. The problem, as I said, is that, excuse me, the problem, as I said, is that most people have really, they're up to their noses in these stocks. I mean, their weightings in the portfolios are really, really high. They can't really buy so much anymore. And what we now need to see is that there are other stories developing in Asia. And I think there are. And I think actually India is going to be one. So gradually we're going to have a shift from, okay, if AI story is played out, we've priced it in markets. I'm not saying that AI is over. It's just the story's been priced in. Then they say, what other growth stories are there in Asia? Now, last year, the story in India, the growth story was not fantastic. It was disappointing, right? And the numbers are starting to come down. But I think next year, as the earnings are going to look a bit better, they're going to say, hey, there's a story in banks and maybe in IT and the consumer sector in India. Why don't we allocate some more money to that? And I suspect actually that very early money, that relocation from North Asia, not so much China, but North Asia into India, has only just started.
And so we've covered India versus China, we've covered the FIIs and the trends around it. What are those India stories to pick up on if FIIs were to start buying? Harold, let me get that out of the way as well.
Yeah. I think there's a couple of interesting stories in India. There's always the consumer story whereby formal retail gains over informal retail. And this is now being supported by your GST taxes. They're coming down, so that allows that to fester as well. A second story, and this is in particular for the staples, your input prices are coming down. You see prices for all sorts of commodities and some of the oil, for example, coming off. So some companies might benefit from that as well. I think there's a story with lower interest rates. It probably means that the banking margins can expand as well. And if you see a bit of a recovery in growth, your asset quality in the banking sector is going to be less of a concern as well. So net that I think would put some of the banks into a better light as well. And then there are as always in India, these idiosyncratic stories, small companies that have a particular niche in particular areas that I think are just that I found really interesting actually in India, and these sort of stories, they will bubble to the surface as well. People will start to look at those as well again.
Right, okay. And Harold, in terms of valuations, now that, yes, we have that government push on the GST front, the RBI front, you have lots of liquidity in the system right now, and these are some sectors that you're bullish on. But what about valuations? Because even despite the recent slowdown that we've seen in our markets back home, markets still continue to be slightly overvalued. Are you comfortable with these valuations, and would you be an investor at this point?
So India valuations, we have to understand, are always higher than elsewhere in the world. And there's a couple of reasons for it. First of all, Indian investors, local investors, can't just take all their money out. So there's a sort of hothouse effect, if you want to put it like that, that drives valuations higher. We see this in onshore China as well. Secondly, Indian companies are generally much more profitable, so they deserve a higher rating as well. But if you then see at the relative valuations, India's come off, and Korea is up 65%. So if you look at the relative valuations, India versus Korea, India versus China, actually India is starting to look to offer value again. Yes, it's more expensive, but the level of expensiveness is really narrowed enormously. So I think valuations are not a major concern anymore as they were, say, 12, 15 months ago in the middle of in 2024 when valuations were really high. So I don't think it's a major issue for the market. It's not a major overhang for the market at the moment.
Harold, again, pointing focus to macro and global macro. Two pieces. One is you've got US tariffs, which is still a bit of an overhang. I mean, and the settled position, at least with most of the analysts we're speaking with, is it's not a very big deal breaker, at least for India. So that's one. But also talk to us about this US government shutdown and what second order impact that could have on Asian markets, especially India. You know, when you're combining both of these, how much of an impact can that have on the Indian markets is what I'm trying to get to.
No, both these stories are really important, big stories in the world. But for the equity market, sometimes they're not as relevant because, yes, there are tariffs imposed on you, but the number of companies that have direct exposure to that is actually fairly limited. Also, there's sometimes a lot of exceptions that you have to look at. It is negative, but it's not as negative as the headlines would suggest. And it's the same with the shutdown in the government, although they're now reopening it, right? But until the end of January, from what I understand. So that is a negative on growth, that shutdown. For the moment, there's a sort of reprieve, so that's a positive. But again, that is a really domestic US story. I don't think that impacts the story of exports to the US that much, to be extremely frank. You can look at that. We've had tariffs imposed on China, but actually Chinese export growth has been pretty good so far this year. We've now seen that ASEAN is now the biggest exporter in the region to the US, not China anymore, because yes, they've been impacted by tariffs, but the tariffs were not as bad, and there's a lot of exemptions for that particular region. So it's sometimes the story is a bit more nuanced than what the headlines suggest. I'm not so worried about the tariffs in India, actually. What I really look at is growth, what's the direction of interest rates, the GST taxes, fiscal policies, and these sort of things to turn the economy a bit around. And I think the earnings profile, eventually, that's what pays us as investors in companies. These earnings in 2026, they're going to look better than they were in 2025.
Point taken, Harold. Harold, let's also talk about the tech space because there's just so much chatter around it. You've spoken about consumer, you've spoken about financials. What of IT? No. Now, again, the entire US, the tariffs plus the shutdown comes into play. How does that impact IT in your opinion? And where are Indian IT companies placed in this new AI order, if I can call it that?
Yeah. I think the Indian IT companies have to take a very close look at themselves and say, what are we doing now that can become obsolete in the next couple of years because AI can do that? And I suspect, of course, they do this already. So they need to reposition themselves. India has done phenomenal job, I would say, over the last 25 years or so by building up this IT industry and effectively becoming a sort of an outsourcing platform to the rest of the world. They've done a really good job in that, and they've moved up the value adder ladder. I mean, 25 years ago, it was checking if your computers wouldn't stop because the internal clock might stop it on the 1st of January 2000, right? That was the Y2K bubble. Now they take care of whole processes of companies that have outsourced back operations and these sort of things to the Indians. So really good job, but AI is a serious threat for, in particular, I would say for IT industry. So they really need to take a good look at it and say, what is a risk to us? And if we can implement AI, can we make sure that the people that do these particular jobs now, can we apply them somewhere else to grow our business? Because eventually, I think AI will allow us to grow businesses and markets further. And so that's what they have to figure out. That will be a difficult process, and some of the companies will struggle with this more than other ones do. And it's really up to the individual stock analyst to say, I think these companies will do well or not. But my suspicion is that you have a bit of a weaker currency support already. Growth will probably come back a little bit next year as well. That actually the IT sector will look okayish. It's not that I'm overly excited by it. I look at banks and consumer, maybe as sectors that I think is more interesting in the very near term, but I wouldn't rule out the IT stocks whatsoever.
Okay, Harold, on that note, what do you think could be some of the key themes that drive the next phase of growth for the Indian market? So could it be formalization of retail? Could it be the infra push coming in, or renewable energy, or could it be something entirely different?
Well, the great thing is that your markets are so diverse that all of these themes can play a role, right? And I think, for example, formalization of retail, that's going on for the last 25 years already, but still have an enormous long way to go. And you have these sort of interesting companies, sometimes in the finance sector as well, that become platforms where people can buy insurance products and all sorts of other financial products. So these sort of companies, kind of innovative, smaller finance players fit into that category as well of sort of formalization of the financial sector, if you want to put it like that. So I would look at these sort of stories as well. And the valuations in some of these sectors are not necessarily a particular stretch. And as I said, also for the larger banks, as the economy recovers next year, you'll have banking analysts saying, actually, we're not so much concerned about asset quality anymore. Certainly, the amount of provisions that they have to put in place is going to be reduced, and that improves the profitability for some of these banks or financial institutions as well.
How do you look at valuations of some of the new age tech companies? We had the most recent listing today. I'm not sure how closely you track something like a Lenskart, but I'm just trying to bunch all of them together, trying to ask you Zomato, Swiggy, and the like, and no names in particular, but just that entire pack, which is typically valued at market price to sales. So trying to understand from you whether you believe that valuations have run ahead of themselves. You have a great grip of how global markets have worked over maybe the last 20, 30 years. How do you see stories like this unfold, and how do you value them? Give us a sense.
I think you have to be very careful when we start to move away from looking at profitability of companies. We've seen it so often before that particular pockets in markets can be IPOs, smaller cap, mid caps, can be particular sectors. They move away from fundamentals. This is just a normal event that happens in markets all the time. But at some point in time, there's a reset to what is reality. So I've seen so often in China, in Southeast Asia in the past, we've seen it in India, pretty much all markets actually, whereby people say, oh, we don't look at profitability, it's about market share, it's about volumes, it's about eyeballs, it's about sales, price to sales. I think you have to be careful with this. I understand that sometimes for maybe a year and a half, stocks can rally and go higher. And then they say, well, Harold said, don't look at profit to sales, but look at these companies, EV to sales. But look at these companies, they continue to go higher. But there will be a reset at some point in time. So you got to be really careful with that. Either you're a short-term player and say, okay, I'll take that risk. If you're a longer-term player, I would be extremely careful with these things. But that notwithstanding to that, there are industries that grow fast. And you want to play those companies that that can gain market share or become dominant in a particular space. But these companies should not forget to look at cash flows, because if something happens in the world whereby suddenly cash dries up, and we've seen this in the dot-com in 2000,
Right.
you had companies in the US that suddenly couldn't get money anymore and they fell over. So be careful with that.
Right, absolutely. Point taken, Harold, and it's been an excellent conversation. Thank you so much for your time.
Thank you very much for having me.
Okay, viewers, on that note, we'll slip into a very short break. Just want to take a look at what the Nifty is doing right now. Last we checked, a 0.5% uptick on the Nifty and things were looking okay. Continues to be there. Day's high coming in 25,626 thereabouts, so not much to worry. On that note, we'll slip into a very short break, come back and talk about some buzzers in trade today.
Some bit of zinc coming into IT, and that's because of the possibility of the US government shutdown ending, providing that relief rally in IT that we're seeing today. But before I take a view on IT from Kunal, let me bring on board Ruchit Jain, Vice President, Equity, Technical Research and Wealth Management at Motilal Oswal Financial Services. Ruchit, thanks for coming in. Give us a take on the index. How are you seeing the move? How are you assessing the levels, and what are the levels you're looking out for?
Yeah, hi, very good afternoon. Well, in last week, we did see a dip from the 26,100 to 25,300, 350 range. Now, if we look at the broader trend on the weekly or the monthly charts for the Nifty, then that is still positive. And hence, this entire correction just looked as a corrective phase within an uptrend. The index has taken support exactly around its 50-day EMA support, which was around 25,350 to 300 zone. And we have seen a momentum resuming back from that support zone. So we believe that till 25,300 is intact, the markets are likely to resume its broader uptrend. We can see some sectoral shift, sectoral rotation happening now with IT coming into favor after a good consolidation phase. But on the Nifty front, on the higher side, we expect this momentum towards 25,800 to 850 in next few trading sessions.
Okay, so that's on the market right now. Kunal, coming to IT, very good move coming in for some of these larger cap names. You have Infosys, HCL, Persistent, they're doing well. But even the mid cap names are doing fairly well for themselves. Emphasis is up 2%, LTI, Mindtree, OFSS, Coforge, all of them are in fact gaining in trade. If you have to play the IT space right now, Kunal, would it be via the large caps or do the mid caps look better right now?
Yeah, it's a good day for the IT index, and this could potentially be also a point where we may finally assume that the Nifty IT index would take support at the pivot of 50-day moving average. For the last, I think, 1 week, 10 days odd, the IT index has been swinging around the 50 DMA. Like on Friday, it was trading below, and today I think it's trading above the 50-day moving average. So it tells you that maybe over the last few days, weeks of the IT index consolidating, we would probably have formed a pivot support at this 50 DMA. Now, if we are looking at a reversal of sorts, or maybe even a trend pickup for the IT index, even if it swings around this 50 DMA, say for another few odd weeks, then the mixture has to be a little bit specific with respect to the kind of stocks which shows relative strength. Now, so far, we are seeing relative strength coming back into the few select large cap IT names. For example, Infosys and HCL Tech are the two ones which are showing relative strength much stronger than the rest of the other peers in the large cap space. Persistent and Coforge lands up to be the other few names from the mid cap IT names, which looks fairly attractive and relatively stronger with respect to many of its other peers. So I think these are the kind of 3-4 names which I'd be bullish on if I have to take a bet on the Nifty IT index.
Okay. What do you make of a trend, Ruchit? The kind of move today, 7.5% lower.
So it's not just today's trading session. In this entire uptrend, we have not seen any kind of move or participation coming from this stock. And post the kind of volumes that we have seen, post the numbers today, this clearly hints at continuation of this underperformance. So as of now, the trend still remains on the negative side, with that low top, low bottom formation is not negated yet. If you look at next major support, the entire previous uptrend that we have seen on the longer time frame chart, 61.8% retracement of that is coming around 3,900. So maybe that we could see the stock testing that 3,900 mark in the short term.
Okay, while we're talking about trend, just want to revisit some of the brokerage takes that we've seen on trend since morning. Because if you take a look at what the brokerage reaction has been, it's a massive downgrade coming in from Citi. And this largely is on the back of the pace of the revenue growth that we've been seeing. Because like we were highlighting in the morning, if you take a look at the quarter to FY25 revenue growth, that was around 40%, 39.6 to be precise. And that has fallen all the way down to 17%. Now remember, the management has guided a plus 20% growth, and they have missed their own guidance in this quarter. So this is also something that doesn't fare well for Trent. And on the back of this and multiple other factors, you have the word coming in from Citi wherein they have downgraded the stock. So that loss of confidence from Citi is something that's not doing well for Trent. Downgraded the stock all the way to a sell rating from a buy. Target price has been cut massively to 4,350 now compared to 7,150 earlier. Everybody else continues to maintain the rating that they've had on the stock, but target price cuts is the consensus coming in across brokerages. Because take a look at Morgan Stanley, continues to maintain overweight, but target price has been cut to 5,456. Similar is the case from Goldman Sachs. You have Jefferies, Bernstein and Macquarie. They both continue to maintain their outperform rating, and the targets have been maintained at 6,100 and 7,000 rupees respectively. So that confidence from Macquarie at 7,000 rupees for Trent, when that stock is around 4,000, 4,100 levels right now, is slightly surprising to see after a quarter like this. So basically, it's its own numbers as well as the miss on their own guidance on the top line, the deceleration of the pace of revenue growth, as well as the big downgrade coming in from Citi, some of the factors that have led to such a massive cut on Trent. So while that is your top Nifty loser right now, let's talk on the flip side about which stocks are doing well from the Nifty index. It's Infosys, HCL Tech. But other than that, all eyes are going to be on Bajaj Finance. Let's take a look at the technical setup, Kunal. Bajaj Finance is up 1.5% today ahead of its earnings. What is your take on the technicals? And we'll also be talking about what to expect from the numbers. But before that, how is the stock placed on the charts?
You know, the setup is quite attractive for Bajaj Finance, but when you look at this with respect to the last, I think, 2-3 quarters when the stock had or how the stock had reacted post results, it's been a little all over the place because there have been days where you've seen post result the stock opening with a gap down of a couple of percentage points, and then going to a further corrective mode. After that, the stock has seen a recovery, and there have been days when the stock has moved up higher post results by a few percentage points, and then remained more or less flattish. So it's going to be a little bit difficult to anticipate which side the stock would probably open up post results. But then my sense is that when the near term charts are quite positive and attractive, when the trend is set on the upside, the risk reward is favorable, then the chances are that the stock may continue to rise up or move in the direction of the trend. So I think in this case, my sense is that Bajaj Finance could continue to move up higher. You've seen a near-term resistance developing closer to 1100 mark for Bajaj Finance. So maybe that could be just about a minor resistance which the stock may hang around. But I think if it breaks past about the 1100 levels, then the next target which we could be looking out for Bajaj Finance would be in the range of 1140 to 1150.
60% returns is what Bajaj Finance has given this year, and it's been a phenomenal year for Bajaj Finance in terms of investor returns. Let's talk about what the expectations could be. Of course, some numbers already disclosed. Let me take you through that first. The growth has been solid. AUM growth of 24%, 4.7% QOQ. You're looking at customer growth of nearly 4% QOQ, 20% YOY. So that engine continues well. The number of new loans booked have actually fallen QOQ. So that's where some part of the commentary will be kept in mind as to what's happening on the number of new loans. Was it just a quarter two phenomena, or are we seeing that going forward as well? Progress on credit costs is going to be critical. They've guided for 1.85 odd% in FY26 full year. Can they maintain that? So will credit costs continue to come off both in Q2 as well as in H2? Bajaj Finance has an impeccable record of following guidance. So any guidance given, any change to that guidance could well impact the story and the stock. Margins will be in focus, likely to inch up marginally. The margin outlook will continue to be monitored, and the growth will be assessed, especially in this quarter. This is going to be a critical quarter for Bajaj Finance because it's going to be a consumer-heavy quarter, and Bajaj Finance relies on consumer lending. So therefore, you'll likely see a lot of commentary around how growth is shaping up for H2 post the GST rate cuts. So we'll have to watch for all of that, along with the numbers themselves, of course. And we'll look out for the numbers. Within the fine print, of course, already spoken about most of it, but profit expected to grow by 24% YOY, 4% QOQ, a shade below 5,000 crores where the profit number is expected at. And you're expected to see Loan loss provisions inch upwards slightly. That's the anticipation, but that will be a key number which will be tracked and monitored, and in percentage terms likely it will come off. That's something that the street will be hoping for, and guidance going forward will also be the key with regard to loan loss provisions or credit costs as one calls it. So that's broadly the take with regard to Bajaj Finance. Ruchit, let me have your take with regard to Bajaj Finance as well on charts. This one has been a rank outperformer. Give us a sense of how you view this one.
The overall trend, no doubt, remains positive for the stock. Now, this year, the returns that that the stock has given, now this comes after a consolidation phase of about 5 years. Now, and post that breakout, that high top, high bottom structure is still getting continued if you look at the weekly or the monthly charts. So no signs of trend reversals yet. I think in case because of results, if we get any kind of minor declines, then that should be used as a good buying opportunity. So have some positional view, and you can keep a buy on dip approach on Bajaj Finance. The major support for the stock is seen around 960, 980 positionally. Until those levels are intact, any declines should be bought into.
Dips is the take on Bajaj Finance, but on that note, we'll slip into a very short break. Lots more to talk about on the other side, so you stay tuned and we'll be right back. Back with closing trades and tracking the last lap of the market for the day. It's been looking good for the Nifty ever since the get-go. Yes, we did see that slight blip towards the midday mark, but we once again recovered. And we continue to be above the 25,600 mark, albeit now it's slightly only nominally. So we'll see what happens in the last half an hour. But we have Mr. Amrish Balika, independent market analyst, joining us on the show to make us or help us understand the market better and give us a better sense. Mr. Balika, hi, good afternoon, and thank you for your time. Let's start by talking about some consumption names, and I don't mean your core FMCG consumption, but take a look at something like a Nykaa or something like Trent and the way they've perked up in trade post their earnings. Very healthy moves coming in. First, let's start with your view on Nykaa or the overall discretionary consumption space, the beauty and personal care space, and quick fashion. What is your take over there?
I think beauty and personal care is one space which is really growing too fast in India and expected to grow at this pace, at least over the next couple of years, looking at the sort of millennium, who are actually coming and consuming these goods. So that's going to continue. So something like a Nykaa, yes, although the sort of increase in profits, what we are noticing now should have come earlier, but then at least it has started coming now. So I think there would be interest in like in a stock like Nykaa even going ahead. But Trent is something where I'm not that positive even now. I mean, despite the sort of numbers which you've seen, because there are a couple of things as far as Trent is concerned, which is creating that caution as far as I'm concerned. Because I think in this quarter we have seen better numbers basically because of that. Cost cutting on manpower, technology upgradation. I think this is already done. From here on, I really don't know as to what is going to save the bottom line, because the same store sales growth is, I think, would actually keep pressure on the stock even going ahead.
Okay, so that's the take on the quick fashion or the BPC space in India, and Nykaa being a play on that. A good set of numbers coming in. The stock is up more than 6%. On the flip side, let's talk about a stock that's deeply under pressure today. That's Transformers and Rectifiers India, locked in lower circuit despite them ordering, despite them announcing an order win, of about 104 crore rupees just a few minutes ago, but no change to the stock at all. 20% lower circuit for that stock, and multiple reasons here at play. One is their earnings, and the second is the order coming in from the World Bank, wherein the company has been barred to bid against any project since till FY29. So some reasons that are weighing on the stock. Let's take it across to my colleague Kanishka, who's joining us with a breakdown of these weak set of earnings for the quarter gone by for Transformers and Rectifiers. Kanishka.
Yes, Transformers and Rectifiers India is in focus today after reporting a very weak performance for the quarter gone by, that is fiscal FY26 second quarter. It has seen a sharp profit and margin decline along with rising cash flow concerns. Now, the consolidated revenue that came in at 460 crore rupees, that's down about 13% sequentially, whereas the net profit that has halved to 33.9 crore rupees. EBITDA has also seen a drop of 42% on a sequential basis to that 52 crore rupees level. Margins, on the other hand, they have seen a sharp decline to that 11.2% level from over 16% in the last quarter. Now, the big worry this time is on cash flows. Now, despite reporting profits, operating cash flow turned negative at 108 crore rupees in the first half of the fiscal, that is H1 of FY26. This was mainly due to higher inventories and receivables. Now, inventory that rose 42% year on year. Receivable days, they stretched to 97. That's pointing to delayed collections and a slower execution pace for the company. To bridge the gap, the company relied on borrowings with financing inflows to about 70 crore rupees, signaling tight liquidity and rising working capital pressure. So yes, that's the reason why the stock is in focus, and the street is now going to watch the management's commentary on margin recovery, cash conversion and working capital control, as these factors will be crucial for sustaining growth in the coming quarters. So yes, that's the reason why Transformers and Rectifiers India is in focus. Cash flow concerns weighing on the stock.
Thank you so much for that, Kanishka. Ambrish, let me come to you. You're looking at this space, Transformers and Rectifiers, you've got large order books. Execution, of course, starting, or rather this quarter was a bit of a challenge. Management commentary awaited as to what's playing out. But this EBITDA to free cash flow conversion, which is not happening, is that a concern, or do you believe that that's a one-quarter problem and therefore at this stage could well be an opportunity to buy? It's been a multi-bagger over the last couple of years. So trying to get your view.
No, that's true. It has become a multi-bagger because power ancillaries were expected to do extremely well. So the sort of numbers which have come clearly is a shocker. And cash flow is a concern, no doubt, because you've seen inventory increasing as well as receivables. And we can't really say that this pertains only to this quarter, and we may see that vanishing in the next quarter. I doubt that, because that generally takes at least some time. So unless we start seeing those positive cash flows, I would say possibly just hold on for a while, because despite this sort of a fall which we have seen, in a normal scenario, we could have said that the weak performance has been discounted. But here, I think I would like to at least wait for a quarter or two more. And the other issue is the World Bank ban. I think that will keep the pressure on for a while longer.
And Ambrish, sorry, a follow-on to that. Translate Lighting, also very similar space. The stock is down 12%. You reckon it's just because of the kind of numbers which have come out from Transformers and Rectifiers? And is this a company-specific problem, or do you believe that this could well be a problem across the sector?
No, this can be a problem across the sector.
Okay.
So I think it will show up for most of the other stocks in the same space.
Understood. And that makes complete sense as to why even Translate Lighting is facing the heat today, 12% lower on that counter as well. Kunal, your take on the technical front on a couple of these names, really seeing pressure today?
So Transformers Rectify is something which I don't track, so I'll skip that.
Sure.
Harsh.
And Translate Lighting also?
Yeah, I don't track that.
Okay. Fair point. Okay. Ruchit, do you by any chance track any of these?
So, Transformer Rectifiers, we have already seen a downtrend in the stock. I think 1 week ago, the stock breached its 200-day exponential moving average support. And from there, we have not seen any kind of recovery happening. In fact, it's not just today's trading session. If you look at last 3-4 trading sessions, the price decline was already backed by high volumes. And whenever we see such volume-based selling, stocks could tend to underperform for short to mid-term. So overall trends looks negative only. There are no signs of recovery. So I think that underperformance is likely to continue there.
So that stock under deep pressure, but a pocket of stocks that is doing very well today is the sugar stock, seeing sweet gains, if I might say so. And these sugar stocks are in focus after the government has allowed exports up to 1.5 million tons and slashed duty on molasses as well. Let's take it across to Ashesh, tracks the sector closely to get more details about why some of these names like Balrampur Chini, take a look at Dhampur, Sri Renuka, all of them are doing very well. Ashesh.
Well, yes, the entire sector, as you rightly mentioned, is buzzing in trade today. In fact, Balrampur Chini is up as much as 6%. Dhampur Sugar, Sri Renuka Sugar, all of them gaining nearly 2 to 3% in trade today. And this after Food Minister Prahlad Joshi yesterday said that the centre is looking to allow about 105 million tons of sugar exports for the current sugar season, which began in the month of October. Now, remember last year nearly 1 million ton of sugar exports were allowed, and the year prior sugar exports were not allowed at all. This year sugar production has been on the higher side on account of higher above normal monsoon, and hence the street was penciling in that the government could probably go ahead and allow sugar exports. So the move is largely in line with what the street was working with. Now remember, when we spoke to a whole host of experts, they are of the view that perhaps more exports will not be allowed for the rest of the sugar season, and it will be capped at about 1.5 million tons, which has been allowed now. Now the two main asks of the sugar industry now from the government, one is with respect to increase in MSP for sugar. Remember, minimum support price for sugar has not been revised since 2019. So that is one of the important asks that the sugar industry has from the government. And the second, of course, is increase in ethanol prices. For ethanol that is made from select category of molasses and syrup was prices of those were hiked some time ago. But for other categories, prices have not been hiked for quite some time, despite hike in FRP, which is the sugarcane price, which means raw material prices have risen, but output price has not risen. So these are the two important asks sugar industry now has for the government. But for now, big respite coming in. Sugar exports have been allowed. Some restrictions on export of molasses have also been relaxed, and that is the reason the entire sector is buzzing in trade today.
Shesha, looking.
All right, welcome back. Thanks for staying with us. And I want to quickly flag off some stocks which are doing extremely well in trade. Again, on the back of numbers, you have a Nalco, for example, which is up 9.8% in trade. Krishna Diagnostics is up 7.7%. A Torrent Pharma is up 6.5%. Now, we've spoken about a couple of those stories, but Ambrish, let me take a quick view with regard to metals and Nalco in particular. The numbers were standout. We spoke with management as well. They continue to drive growth, for the size that they are at. What's your sense with regard to where the stock price is currently? Give us a sense on how you're looking at valuations. It's been a multi-bagger since maybe the COVID lows,
Right.
when the stock was at 30 rupees a piece. We're currently seeing a near 9-bagger on something like a Nalco. Give us a sense on how you're looking at it.
See, one is the performance, which has been extremely been good.
Yeah.
And now, if you're talking of aluminum prices, clearly, I think there's some more upside as far as aluminum prices are concerned. So that should show up in the next couple of quarters. And valuation-wise, not really expensive as yet. Although it's become more expensive than where it was earlier, but still, I think valuations is decent, single digits. So I think we could see possibly either 20-25% of a move over the next 1 year or so.
That's on Nalco, but like Harsh was mentioning, we also interacted with the management in the first half of the day, and after posting a strong second quarter, we caught up with Brajendra Pratap Singh, the chairman cum managing director of Nalco, on the way forward for the company. Let's go across and listen in to what they had to guide when it comes to their top line for FY27 and FY28.
Now, the present revenue somewhere is around 16,000, 17,000, depending on the relation which we are getting. With this refinery coming in financial year 26-27, we are targeting around 5 lakh tons from that refinery. After that, in the subsequent year, that is financial year 27-28, that will be doing around 10 lakh tons additional. So 10 lakh tons, if we see, then that will add a revenue of around maybe 2,000, depending on the realization, 2,000 crores of additional. So we may go up to touching around maybe 19,000, or depends on the prices of the alumina which we get, somewhere around 19,000.
Okay. Kunal, what's the view on an Nalco? The kind of move that it's made today, 9.8% higher.
Yeah, it's a phenomenal chart, and I think when you look at this consistently over the last 2-3 quarters, the stock has done reasonably well. So from a point of 140, I think somewhere either this year, March or April, 2025, towards the point when the stock is at 255, 257, still some distance away from breaking the previous highs in 2024. But then the recovery in the last 2-3 quarters, I think, has been phenomenal for Nalco. This indicates that we are looking at a major uptrend restarting for the stock price. The best part about the stock price trend is when you look at this historically, we've seen that Nalco has the capacity of going into major multi-month, multi-quarter uptrends on a trot. So I think we could be looking at such a kind of a similar upside for the stock. So in these kind of scenarios, it generally becomes a good strategy for traders to look at decent dips into the stock prices as a good buying or accumulative opportunities.
Okay, so that's on Nalco and metals. Mr. Malik, I want to talk to you about a very niche space, but something that's been doing very well, and that's the entire co-working space. Take a look at IndiCube, for example. Good set of numbers coming in. That stock is up 6 to 7%. WeWork on the other side was up 3% in the day, but has lost out on all of those gains. Your take on this new form of real estate, if we can call it that, on the commercial front, and where do you think the future of these shared spaces is going ahead?
No, share spaces, clearly the demand has been increasing year on year. Only thing is we have not yet seen the margins improving. I think that we should see possibly over the next 4 to 6 quarters. So from that point of view, I would be decently bullish on these stocks. So I think any sort of a correction in the market should be utilized to buy these.
Okay, and Kunal, limited chart history for something like a WeWork or an IndiCube, but by any chance, any coverage, any price target?
Not really.
Yeah.
Very, very flattish, very, very range bound, very limited history, so difficult to comment.
Okay, so we'll just focus but talk about the overall real estate space, Kunal, not only on the commercial, the overall side of things, because for instance, you had Anant Raj today, very good set of numbers. We interacted with the management. So was the case with Puravankara, where the numbers were slightly weak on the profitability front, but their debt repayment plan, that looks solid going ahead as well. Puravankara, yes, a 1% cut on that stock, so that stock continues to be under pressure ever since the get-go. Kunal, you're reading on the charts for something like an Anant Raj, because you also do have the data center business that's powering up that stock.
Yeah, so I think on the real estate pack overall, very bullish. And I think in this leg of uptrend, you will probably see a point where the realty stocks would start to be one of the better performers in terms of sector. So very bullish on the pack. Now within the pack, of course, we've seen Godrej Properties, Oberoi Realty to a larger extent being the strong performers, maintain those stands over there. Specifically for Anant Raj, I do sense that the stock has come back towards a very good retracement support. So I remember I think the stock was closer to 900 plus in 2024 end or 2025 start, and from there the stock had gone through almost like a 30 to 40% correction. Prior to that, the stock was almost at 100 to 150 odd, I think 2022. So after almost like an 8x, 9x kind of a rally for Anant Raj, the stock is finding some bit of volatility to come by. Broadly, a 20% correction is a good enough zone where traders could look at a buy or accumulate on such kind of a stock. I would be very bullish on Anant Raj from a long-term perspective, but short-term wise, I would believe that maybe the stock could just about hang around to trade at the 600 to 700 kind of a trading range.
Okay, so that's on Anant Raj, but one other stock that I want to mark right now is Swiggy. That stock has been in focus. Remember on Friday the board met and they've approved that fundraising up to 10,000 rupees via QIP. So that is the reason that the stock is in focus. If you compare how this stacks up against the cash books of its peers in the listed as well as non-listed space, so here I'm talking about Eternal as well as Zepto, and you also have to keep in mind that the Rapido stake sale amount that they're looking at, they say that it's going to be realized in Q3 itself, so that is also going to give another boost of about 2,400 crores to their overall cash piles. So combining their existing cash book plus the Rapido stake sale realization plus this 10,000 crore fundraise now brings them to about 17,005 odd crore rupees. Zepto, despite its multiple fundraisers in the recent past, is at around 7,900, and you have Eternal at 18,315. So that's how these players stack up. The other reason why the stock is in focus is, remember last week Bernstein initiated coverage with a target price of 570 and an outperform rating. Today you've got Nuvama that's initiated a buy rating on the stock with a target price at 510 rupees per share. So that stock was doing very well in the first half, up about 2.5%. But the knock that we've seen today, that stock has seen a little bit of a cool off, but nonetheless recovery from the day's low as well. Kunal, we've always asked you your take on Eternal versus Swiggy. We'll come to you on the technicals as well. But Mr. Baliga, how are you stacking both of these quick delivery, quick commerce players, Swiggy versus Eternal? And after this fundraise, does that change your view on Swiggy? Does it make it any more attractive than it was before?
In fact, I like this space quite a lot, and Eternal has been on my buy list for a long time, as against Swiggy. But now with this fundraise, possibly things can change for the better for Swiggy. But I would still wait for some more correction, because the correction has just started because of this large fundraise. I would say levels of closer to about 265, 270 could be a good level to start buying Swiggy again.
And Kunal, your take on the charts, because we've seen that run up coming in Eternal, but post its numbers, we've seen that cool off coming in as well, and 300 thereabouts for Eternal. Now a good time to buy or still wait and watch?
No, it's a good time to start accumulating. You can't have a stock price which comes at a perfect level for us to buy. But then you land up to a point where the stock comes towards a good retracement support. I think for Eternal and for Swiggy also thereabouts, the stock I think has reached the first pitch stop in this leg of a correction. Maybe there could be some more degree of a fall into the stock price, but then largely I think the stock should just about pivot around the 300 levels. I think a similar kind of a stance had happened for Eternal or in the previous version Zomato, when the stock had fluctuated around the 200 levels from 240, 50 levels. I think a few quarters back, the stock had corrected sub the 200 levels for a few odd weeks, and then the stock recovered quite sharply. So I would sense a very similar kind of a stance this time around. The base has moved up higher for Eternal, so that's another positive when you look at this from a medium to long term perspective. But I think broadly, 300 could be a good starting point for traders who are looking to accumulate the stock further.
And Kunal, this cool off that we've seen in Newland Labs, we saw a sharp spike. Let's pull up the stock intraday. What do you make of this? Stock was holding up okay, and then just we've seen a bit of a collapse right in the morning itself. What do you make of this move? And what next if you're an investor who's bought in at those levels?
Yeah, I think this seems to be more of the first half an hour where the volumes jumped up significantly high. I would sense some sort of a high volume trade which could have happened at 20,000 odd levels for Newland Labs or thereabouts. But I think broadly the stock still looks very attractive from the long term play. So look at it this way, that the stock, I think except for that start of 2025, where it went through almost like a 20% correction, you look at the previous last many years, and even the stock price trend post the recent correction, Newland Lab, I think has gone through a decent uptrend. So I'm not sure of the intraday sell-off the stock has shown today, but I think broadly the longer term trend is extremely bullish and positive.
Okay. And, of course, Bajaj Finance is one counter which will be in focus because of numbers. ONGC is the other one. All set to come out with Q2 numbers. Net profit expected to see a significant jump on a sequential basis. Ashesha here to tell us what the street is penciling in.
Well, yes, for ONGC this time on a sequential basis, we are expecting strong set of numbers. So net sales could come in at about 33,000 odd crores, which will be an uptick of about 3% sequentially. Margins, meanwhile, are expected to remain steady at that 58.2, 58.3% mark. And as far as PAT is concerned, that too is expected to see a jump up of nearly 21% on a sequential basis. Remember, on a sequential basis, crude oil prices have risen, and that is likely to aid realizations for ONGC this quarter. APM gas allocation was also on the favorable side, and that is also likely to aid. Remember, oil prices, as I mentioned, on a sequential basis they've improved, but on a year-on-year basis they've fallen substantially. So on a year-on-year basis, if we try to compare the numbers, then ONGC numbers are definitely going to look weak. Gross crude oil realization is expected to decline 14% YOY but jump nearly 2% on a sequential basis. And as far as net crude oil production is concerned, that is likely to rise by about 1.5 to 2% on a sequential basis. As far as gas volumes are concerned, they too were on the higher side. So both oil and gas volumes are expected to see an uptick of nearly 2 to 3% on a sequential basis. On a year-on-year basis, numbers will look weak, but sequentially on account of higher oil and gas realizations and higher volumes, we are expecting strong set. Remember, update on a ramp up of their gas production will be crucial this time around. But yes, all eyes will be on ONGC, which is set to report its numbers later today.
Okay, thank you for that, Ashesha. Ambrish, let me come to you. OMCs, ONGC, that entire bunch of stocks, how would you play it if at all you would want to play it? Would you play it through OMCs? Would you play it through oil upstream? How should one play this? And give us the rationale for a little bit.
I'll surely play this through the OMCs because I don't really see the oil prices shooting up much more from where we are, possibly plus minus $4 to $5. And the refining margins have moved up as far as the Singapore refining margins are concerned. So I would surely look at the OMCs which have these refineries. So clearly something like a HPCL, BPSL, and IOC. I mean, these are the three OMCs on which you can play.
Okay. Some of the auto counters that have run up, Ambrish, let's pull out something like a Force Motors, let's pull out something like an SML, Isuzu, some real big movers over the last few months. And again, this one, we saw a large spike on this one as well, right, Kunal? Sorry, let me take a technical view first because I recall seeing that spike early today morning. I recall discussing this one with you as well. What's the sense like with regard to a Force Motors?
I think it's a very good chart on the longer term basis. I think the stock has gone through a decent 20% correction from 22,000 thereabouts mid of this year to 16,000. Now I think it's on course of trying to recover and gain back its uptrend. So I think I would probably look at this as a good opportunity to try and chip into the stock.
Okay, and Ambrish, do you have a view with regard to auto? Where would you place your bets?
No, I mean, if you're talking about the next 1 year, I would surely be positive on auto, especially stocks like Maruti, Mahindra and Mahindra, and in two-wheelers, Hero MotoCorp, TVS Motors. But I mean, if you're talking of the next 1 or 2 months, I suppose we may get an opportunity to buy it at lower levels because after seeing excellent numbers, monthly numbers for the auto stocks, we could actually see some amount of flattening over the next 1 or 2 months. And that's the time you may get these stocks at lower levels. But longer term, surely bullish.
Makes a lot of sense. Okay, thank you for that. Another one which is standing out is a Penyar Industries. Stock is down 15+%. I'll just quickly read you through the numbers. The revenue is down around 7% on a QOQ basis. Operating profit also down by 6% Margins seem to have remained flattish on a QOQ basis. Now, the revenue decline is likely in the higher margin PEB segment. That's intended to be the margin driver, and that's seen a 10% QOQ revenue decline, and that's where some bit of pressure has crept into the numbers. There's pressure on profitability as well, which fell over 10% on a QOQ basis. Also, we saw a bout of buying happen at the end of last week, which kind of may also have been one of the reasons why we saw the kind of move that we've seen today. And the guidance is that they're going to maintain double-digit growth in terms of top line. So we'll have to wait and watch as to how this plays out. But that's, of course, on a Penyar Industries stock down 16% in trade. Again, it's very, very earnings heavy. It's very, very earnings led. We thought we'll quickly cover that. But let's toss it across to Snehi for the market close. We're at 327. A few minutes to go to close.